Mahantesh Sabarad joins us on the show. Mahantesh, there was, part of the street which was expecting that now the bulk of the rally is going to come from the large caps and the mid caps and small caps after that 70% gain in FY24 might see a bit of an underperformance. Would you buy that argument?
It depends on how we see in terms of the earnings growth ahead, because one of the key factors for the earnings is obviously the monsoon, upcoming monsoon, and the forecast thereof, as well as what's likely to be the outcome of the general elections. Now, these two key events will determine the earnings path for most of the companies, and therefore, I said it depends on how you will see these events play out. If both these events play out as the market explains, that means you have continuation of the government and you have better monsoon forecast, you will have solid earnings growth to come in. You might expect a little bit of moderation in valuation, but the market momentum will not get disturbed, will not see a great fall. We'll probably see a more steadier growth in market. We will not obviously see the like FY24 a 30% rally in large cap and a 60% rally in mid caps and small caps. We'll probably see them moderated down to somewhere around 20%, 15, 20%. But that's good enough.
But Nuresh, your view on the market right now as we are slipping and giving up those gains, 22,200 was a bit of a hurdle. Do you see us falling back below to that level?
Not really. So if you look at it, today is the last day of the month. It is also expiry. So what do we see on the last day of the month in the last 30 minutes is an ETF impact. We've seen this happen multiple times. You see large volumes happening in the index heavyweights for the last 30 minutes because ETFs need to get the impact price closer to the closing prices of that day. So overall, this could be an opportunity for a short-term trader to look at some buying which they have missed out on. So overall, the bias remains positive. I would actually take a risk and go buy some naked long calls of Nifty for the next week.
Convinced that the up move is here to stay. But Rudra, let's just get in, your thoughts as well in on a Bajaj Finance, considering, that amongst the NBFCs being a large cap has been seeing a gradual run up. And today, of course, the stock is on a tear, over 4% of a move coming in.
See, for me, Bajaj Finance has now clearly broken out and it is trading well above 6,900, which was a crucial hurdle before. So for me, every dip to levels closer to that 6,900 to 7,000 levels will be a buying opportunity. Stock has very good potential to go back to those levels of 7,600, 7,700 levels very quickly. And I feel even at current levels and on dips to 7,000, Bajaj Finance will be a great buying opportunity. And quickly a view also on this small correction what we are seeing now. I fully agree with Nuresh. This is just that opportunity for people to buy in this dip, and it is just that monthly factor of expiry what is playing out right now. Use this opportunity to buy great stocks, and I see this up move continuing in the next week. In fact, in the next entire April series, market will go up. Use this opportunity just to buy.
Okay, hold that thought. Gentlemen, we'll come back to you shortly to make sense of what's happening in the markets. But for now, taking a short breather on the show. Don't go anywhere. Welcome back. Well, the market is not relenting at all. We are still below the mark of 22,300. So there's no buying on dips which is emerging. Contrary to what Nuresh and Rudra have to say, that this is just the impact of the last 30 minutes of the trading session. Maybe some ETF rebalancing on account of the year end and the expiry that we are seeing. But for now, the market has given up gains. Even Bank Nifty, for that matter, is down, and ditto can be said for the mid cap as well. In terms of the individual names, VIP hasn't let go of too much of its gain. It's still up around 14%. Aegis Logistics up another 13% in the trading session, though rate gain is coming under pressure. That stock is down 6.5%, and Safari Industries has managed to lose out further. That stock is down almost 4 to 5%. But Mahantesh, what's your take on this entire consumption theme? FMCG has been a stark underperformer in the year gone by, and I'm talking about staple consumption factors at that. Do you see anything that gives you to believe that FY25 will be different for FMCG?
I think there are many multiple reasons that can be attributed to the lower performance of FMCG companies. There's been starkly lower volume growth. I wouldn't say negative volume growth, but very tepid overall volume growth. The premiumization effect is somewhere stalled, and you have commodity prices actually eating out the profits of most of these companies. Now, on all these three factors, as we move into the year ahead, we can expect things to be a lot better. With better monsoon forecast, probably we'll see volumes resurging once again for the FMCG companies. Commodity prices are likely to moderate ahead and can add to the bottom line effect or margin effect of many of these FMCG companies. And quite frankly, most of these FMCG companies are under-owned in terms of the overall portfolios of either the institutions or, generally speaking, the market. So these factors, when they come together, we should see a better year ahead for FMCG companies, because from the perspective of growth, steady growth, most of these FMCG companies are well managed. The only thing that they need to get back in terms of their mojo is the volume growth. If that happens, all other pieces will fall in line, and the companies will start doing better. Of course, the under ownership would mean we could see a valuation uptick.
Let's just get Shrishti back and get an estimate of how the Motown sales are going to be for this particular month. That's the month of March, because remember, 1st of April we'll have the Motown numbers as well start to trickle in. We'll just get Shrishti in just a bit. But yeah, given the performance that you've seen for both Bajaj Auto, Maruti at a record high, would be interesting to see whether the strength remains with these players, or is there a catch-up based on numbers, if there is an uptick at all in the farm equipment segment of autos or not. But Naresh, wanted to get your sense in on what's looking like the strongest within the auto basket right now, and where is it that you're comfortable buying or going long even at these levels?
So in terms of strength, clearly Hero MotoCorp has been one which has shown a lot of strength and now consolidated as well. So this could see another leg up once it sustains about 47.50. Maruti, the concern is being bullish from 10,000. The stock is at 12,500, 600. So after a 20-25% move, the risk reward is not great for a fresh entry, but still looks promising for more. So in terms of strength, this is still well. I would go a little contra and look out for name which has consolidated and not gone anywhere is Ashok Leyland, which is at around that 165 mark. So 165 to 170. This could possibly surprise on the upside going forward. So I'll go a little contra and look out for Ashok Leyland.
Okay, we will just have Shrishti in just seconds from now. But 4 minutes left to go before we wind up for the week, for the quarter, for the month, for the series, and of course the financial year as well. We will close down with Ansh telling us about how the fiscal actually has panned out, and we will get to him in just a second from now. But we're closing in with good gains. Both Bajaj Finserv as well as Bajaj Finance have had a fabulous move. Agrasim, M&M, Eicher Motors, Adani, Hero MotoCorp, SBI, ONGC have all had phenomenal gains in today's trading session. But what about the fiscal close? How's the fiscal been? Let me take it across to Ansh and close it down with how FY24 was for D Street.
So this financial year, Nifty, Nifty Mid-Cap, Nifty Small-Cap, all three are registering its biggest single financial year gain in over 20 years. And all three have also touched record high levels as well. Nifty has gained around 29%, having Tata Motors and Bajaj Auto as the top gainer, gaining over 130%. Whereas in losers, we have only two stocks, which are HUL and HDFC Bank. Now let's talk about other broader indices. Mid-cap and small-cap are up by around 60 and 70% respectively, and around 90% of both mid-cap and small-cap stocks are in green, with over 20% stocks delivering return of more than 100%. Let's shift our focus to sectoral indices. All major sector indices are in green, and they even touched record high levels this financial year, except for Nifty IT Index. Nifty Realty was the top sector gainer, which was up by around 130%. This is the biggest single financial year gain in last 10 years. Whereas if we talk about other indices, we are seeing Nifty PSU Bank has been advancing for 4th consecutive financial year, and same for Nifty Bank as well. Let's talk about market cap as well here. And we are seeing that India's market cap of stocks for financial year 24 has increased by around 123 lakh crore, out of which Reliance, Bharti Airtel, TCS, LIC and Tata Motors have contributed the most. So overall, financial year 24 looks very positive.
Okay, that's about the financial year, but what about the day and the series? Anisha is here to sum up all of that. Anisha?
Well, yes, the market is not ending as much as in style as we would have wanted it to be, because it could have been a close at probably record high levels for the financial year, and that could have been the photo finish that we would all have been wondering for. But for now, the market has actually ended off the highest point of the trading session. We do have Nifty with a gain of almost 1%, but it's a bit softer than what we expected. We could have well above being 22,500. At least that is what things would have been looking at as far as Nifty is concerned. But for now, still we are seeing a gain of almost 1%. Let's take a look at Nifty Bank as well, almost 47,140 at the index level. Again, given up from the highs of the trading session, but still something to ride home. And overall for the year as well, we have seen decent amount of gains come by. It was PSU Bank sector which was actually doing quite well for itself in the year gone by, and that continued today as well. We have seen a rally of almost 3% for Nifty Bank as far as PSU sector is concerned today. Taking a look at the mid cap and the small cap index too, a 70% kind of gain is what we have seen on the small cap index for the year gone by. Yes, today has been a bit more tempered, a bit more flattish, but after that 70% gain in the year, you can't ask for more as far as the small cap arena is concerned, but still a decent amount of close coming in. Let's take a look at the individual counters. Reliance Industries will come up for you on the screen. It started off well in the green, things were going okay, but in the last 30 minutes or so, it let out most of its gain and ended below the mark of 3,000 for Reliance Industries. Even the banking names, the likes of HDFC Bank as well as SBI and ICICI Bank, for most part of the trading session, they were holding in the green, but by the end of the trading session, they too gave up the gains. Infosys, for instance, was also one of the top gainers at the start of the trading session, but by the end of the day, we have seen that it's given up the gains and ending the day with a gain of around 2.7%. Individual names that deserve mention for the trading session today, VIP Industries does come to mind, that 13% gain coming in on the counter as the analyst meet was held, and of course, the management talked about how they're looking at 15 to 20% kind of growth for the next 3 to 5 years. So that really supported the sentiment. Aegis Logistics is the other one that we should watch out for in the trading session today. It's closing in on style. There was that initiation that came in from IFL. Street is excited about the 500 rupee target price that they have envisaged for the stock. Right now at around 443. So overall, it's a good close coming in for the Indian markets as far as FY24 is concerned. Last day of the trading session for the financial year could have been better, but nonetheless, a gain of almost 25 to 30% for the year will be taken by both hands by the bulls. We're wrapping up this trading session as well as the year FY24. Stay tuned to ET Now for more.
If you like this video, then like, share and subscribe to ET Now.